Okay, this is the upper part of the range. It has been broken. Okay, and the bulls are active. All right, the bulls are more active. This is the lower part of the range. Okay, yet to be broken, but the upper part has been broken, and price closed above the range. So that's an indication that a price might go up, but it might not just go up, it will just possibly range above the upper part of the range for some time, before going up. So that's that for the daily time frame. Okay, this candle is an institutional candle. It's a full body candle, and it's a bullish candle. All right, so it engulfed this bearish candle with small body and long wick. It's completely engulfed it. So the initial bearish stance has been changed to bullish, but this is forex. It could just go up a bit and form like a doji or possibly armor, and then could just drop way back below. Okay, could drop way back further down below the bottom of the range for us to have a liquidity sweep. Liquidity sweep, what do I mean by liquidity sweep? Liquidity point is around here, where we have so many stop losses. Now with this bullish candle, all the stop losses are being swept, okay, or grabbed. Okay, now price to reverse completely with possibly a news or an information or an event will happen that can make price to drop suddenly, and then we now have head and shoulder pattern. But for now, it looks bullish. All the stop losses above the top of the range has been cleared. Okay, and on the daily time frame, the price of gold appears to be bullish until something happens. So if it remains bullish and the buyers or the bulls continually stay in charge, then we'll be looking at the resistance area around here. Okay, so that's that for the daily time frame. Let's look at the perspective of how we can scalp gold on the smaller time frames. But before we get there, let's look at the 4-hour time frame. Look at what happened on the 4-hour time frame. We have a range. Okay, stop of the range. Okay, let's say the bottom of the range. Price is ranging. So once we have, as soon as we have a break above the top of this range, a break and a close above the top of this range, price is expected to continue up. But if it breaks close and then reverse, if it reverses down, okay, and that could be a pointer that the bears have stepped in. Okay, and the price might start to retrace its step with a much more increased speed, and then reverse completely. But if it's going to reverse completely, we are on the 4-hour time frame. We have a support level around here. Could reverse up to this point, and then we could have continuation of the range or a drop. Okay, so only time can tell. That's for the 4-hour time frame. But on the 4-hour time frame, it's established that we have higher high. This is a high. It's a high point. Okay, on the 4-hour time frame is a high point, and this new high is higher than the initial high. This is higher than the initial high. So if price is gonna drop, price could drop to this point first, which will be our support. Now the resistance has been broken, got broken. We have a break of structure around here, so price could drop to that particular area before going back up, if it's going to go up, if eventually price is going to go up, okay, for going back up. But for now we have the high here, and we have a break of structure to the upside. So if we could retest, then go back further up, or drop completely, reverse everything completely. So only time can tell. Let's keep our fingers crossed. For now we have a new high, and the bulls will be counting on that for them to push price or further up. Okay, on the 1 hour time frame, what do we have? The 1 hour time frame, we have a bearish engulfing candle. This candle is bearish engulfing. Okay, so if we are going to draw our Fibonacci retracement to, okay, price could trace to 23.6 area and then continue its direction up, or it could drop to 38.2 area and then continue its direction, the current direction up, or it could drop to 50 Fibonacci retracement, or it could drop to 618, or it could drop to 78 4 before going up. But the deeper it drops, the clearer it becomes that the bulls are getting tired and we might have a reversal. But if it drops and the drop is not really deep, probably it stops at 23 or 38, then that means the speed is still, the momentum is still high, and price could continue up and go higher. All right, so that's that for now. On the 1 hour time frame, there is a bearish, we have a bearish engulfing candle. Okay, though it's small compared to the entire the rest of the chart, the candle is relatively small, but it's bigger than the initial candle before it. So that's an indication that price will drop. If it's going to drop, apart from the Fibonacci 2, we have a support around here. Drop to the support area. Okay, but that's that for the 1 hour time frame. Let's go to the 30 minutes time frame. On the 30 minutes time frame, we can see that the bears are currently active, and they are looking for a way to push price down. Okay, the bulls, after making this tough run, we had people taking profit, booking profit, and as a result of booking profit, sellers step in. As soon as the buyers start to book profit, okay, book profit around there, sellers stepped in and they drove price down. Okay, some buyers also came in, possibly the New York or the Asian session came in and pushed price, and the sellers dropped it. Okay, buyers also came in, pushed price to this point, and sellers are currently dropping it. But how far are they going to drop it? The first drop level is around here on the 30 minutes time frame. If that fails, then the next drop level will be here. Okay, so we have 2014 and then 2011 as the support. Okay, if 2014 fails, drops to 2011. Now 2011, if that fails, then the Fibonacci 2 comes in, where we start to look at the 38.2% Fibonacci retracement level, look at the 50% Fibonacci retracement level, then the 61.8 Fibonacci retracement level. But if the sellers are not really that strong and the buyers step in as the London session opens, our initial resistance will be at the 2019 area. Okay, if that breaks, price will continue to go up. Okay, so that's that for the 30 minutes time frame. Let's quickly run through the 15 minutes time frame to see what we can get to scalp today. On the 15 minutes time frame, we can see that we are having a low. We have a low here. We have a low right here. We have higher low, and we also having the development of a higher low. Okay, so on the 15 minutes time frame, the trend is still bullish. Okay, it's bullish. So you look to scalp buy. All right, as far as the 15 minutes time frame is concerned, look to scalp buy. So if you are scalp buying, if you are buying few pips, 5 pips, 10 pips, 20 pips, you might buy around here and then target 2019. That should be about 30 pips. Okay, or you wait for 2019 to break before you start to target your scalp. Let it break, then you enter your trade, or you could place a buy stop above 2019 and then buy 10 pips. Set your pending order for 10 pips profit, 20 pips profit, 30 pips profit, depending on what you want for the particular moment. Okay, so if you are not looking at buying, you might be looking at selling. Place your sell stop order below 2014.86. So if this trend line, this ascending trend line, if it fails, okay, if it fails to hold price, you could place, you could scalp sell. So if you are scalp selling, you might be looking at your support around here, which is 2014. That's around 8 pips. Another support around here, that's 2011. From 2014.8 to 2011, that's around 38 pips. Okay, so just continue to monitor. This is a 15 minutes time frame. Continue to monitor so that you can find the right scalp opportunities. But for now, it's better to look for buy opportunities if you are going to scalp. Okay, so let's look at the 5 minutes time frame before we close for this particular session. Let's look at what's happening on the 5 minutes time frame. Are we having any double bottom, double top, head and shoulder, triple bottom? Okay, this is the 5 minutes time frame, and on the 5 minutes time frame, we can see that the bears are active. The bears are active as the bulls try to step in. You can see red candle still forming. Okay, so if you are going to buy, scalp buy, you might need to allow price to break above here, 2016.43. So if price breaks above that point, then start to look for breaks and close above that point, start to look for how to scalp buy. Okay, so but for now the bears are active, and you can see the red candles are still forming. The bears are trying to push price to 2014. Okay, look at, we have a high here. We have a higher high around here. All right, we have a low here. We have a low around here. Okay, higher low. So the chart is still showing, the price chart is still showing that in as much as we have up, retrace, up, currently retracing until it breaks this particular low for us to now have a double top. Then you look forward to scalp sell. But for now, the scope is still bullish. You could wait for it to get here, then try to scalp 10 pips, 20 pips, 30 pips. But for now, the bears are active, so your intention should be to scalp buy. Okay, but wait for price to get to certain levels before you enter your trade. But if price forms double top, all right, if it forms double top, this should be of your first top, this will be your second top. And this is your neckline. This is your neckline. This is your neckline. Okay, if it drops below the neckline, you can scalp sell up to this point. Okay, you can scalp sell up to that point. Okay, because the bears are more active for now. In the last 30 minutes, the bears are more active, and as I do this video, the bears are still trying to push price to establish a new low. Okay, so if we are going to start buy as regards the 5 minutes time frame, put it on hold for now and let there be a clear direction before you can enter your scalp trade. But for now, it appears as if the bears are trying to break this low, which is around the 2014 low. If it breaks and closes, then enter your scalp sell. Okay, but overall scope is still a bullish structure, so you have to be very careful when entering your scalp trade. Can we see anything on the 1 minute time frame? Of course, the 1 minute time frame shows clearly that the 1 minute time frame shows clearly that the bears are in charge. And as the bears are in charge, you need to look for how you can jump in on the selling train. Okay, you have your high here on the 1 minute, you have low, another low. Okay, whereas you have stop losses around here, which is your liquidity, and it's about to be grabbed. So price could grab the liquidity, could drop below the stop loss, and then go above to break the liquidity here again. You have liquidity here where you have buyers placing their stop losses below that area. Then you currently have liquidity here where you have sellers placing their stop losses in case price goes up. So price might sweep both liquidity levels before going in any direction which it ordinarily wants to go to. Okay, so don't rush, just allow price to form this direction for entering your scalp trade. But it's quite obvious that for now sellers are in charge. Okay, so you might want to look for scalp sell opportunities for now until you have a break above here, a sweep of this liquidity. It's going to continue above this level. You also have this level to contend with, this particular level to contend with. Okay, there's another block around here which is somewhere around here on the 1 minute time frame. So a break above here should give you a clear reason to start to buy. Okay, so that's that for this particular video on how to scalp gold on the smaller time frames. Don't forget to smash the subscribe button if you are yet to subscribe to this channel. Also smash the like button if you like what you just saw. Drop comments below the video, ask questions. We try as much as possible to respond to your question. Also smash the notification button, the bell button below the video, so that when we release another video you'll be notified. You can visit our website www.beanfxtrader.com to learn more on how to trade gold. You can also visit another website of ours, fxfables.com, to learn more on how to trade gold. Till I come your way tomorrow, is bye for now.